So hello, everyone, and welcome to another episode of the Homeroom Lending Podcast. Today we're joined by Kim, my co-host, and my very good friend, Matthew, financial advisor, insurance guru, and my chair is gradually going down as I'm talking. All right. So as I was talking to Matt, I'm going lower. Oh, Matt is just getting taller and taller.
I wish.
So Matt, why don't you tell us a little bit about yourself and what you do?
So I'm a financial planner with Prudential. Been so since 2009. Prudential is a shop that covers not only just basic, financial planning tools and investments, but does life insurance, all other types of insurances as well. So we're kind of the one-stop shop when it comes there. Part of what drew me to them in the beginning, I didn't have to focus on one area. And we get to help a variety of different clients, which is what you need coming up with a whole holistic financial plan.
Absolutely.
What made you get into the industry, to the business? How'd you get there? How'd you get here?
All right. I graduated from Bryant University in 2009.
Nice.
I had a job lined up going into it, and obviously 2008 hit. I get an email the week before my spring break saying, "Hey, we've cut the salary for the position from $44,000 to $19,500."
Oh, wow.
Okay, can't even survive on that.
Wow.
So, basically, kind of looked around. I double majored in finance and management, so I knew I wanted to do something in the field. That was where my job was that I had prior lined up. And when it came time to interview at different places, I never really considered myself a salesy person. But took a commission-based job, kind of threw myself at it, studied it, and worked. And here I am from 13 years later, 14 years later, wherever we're at. Yeah.
You're an expert. 7 years in the business, you're an expert.
Yeah,
you're a pro.
You learn.
You learn, that's great.
It's been a lot. But, you start off with insurance. I didn't really feel comfortable handling people's money so early on as a 22-year-old kid right out of college. So 2009, 2010, I really just focused on the insurance planning aspect of it. Then 2011, I got more of my securities licenses, and that's when I kind of took it up and was like, all right, I could do this. I'm confident. I know.
Right, so you knew
now.
not to, in the beginning, which, is nice. That's good.
Considerate,
Very
honorable. A lot of people don't do that.
It was tough to, in the beginning, be like, hey, you know what? This is my main focus. You try to make yourself sound good without being like, hey, I started this job 6 months ago.
Fake it till you make it.
Right.
That's it. Exactly.
Kind of was. I focused on what I knew I could do. Honestly, I still love the life insurance aspect of it. I know that's like the boring part of my job because life insurance isn't as sexy as making a full retirement plan.
But it's necessary.
But every financial plan, if your financial advisor, financial planner is not starting off with insurance, it's dead on arrival because your whole plan changes if you're not here. So
exactly.
No, it makes sense.
Sure.
Like build up like a residual base with the insurance, and then the investments give you you can give residual from the investment as well.
The residual income comes more from the investments. The life insurance is more of a one-time commission.
Because you're doing more like term and then
term and permanent
managed money.
But you get managed money pays the residuals. But the term insurance, but it builds you up a book because maybe someone needs term now when they're first buying a house. Get a 30-year term to cover your 30-year mortgage. Right. And then, hey, as things change, maybe I want permanent insurance now, things like that. So you already have the client base is how your residual is with insurance because, you may have sold that insurance 5-10 years ago, but it may not be appropriate for them now. Things change.
Right.
Yeah. You build a client base and okay.
And that's the first thing I always tell clients too, and people that are like, how can I refer you business? Anybody that should see a financial planner or financial advisor, any major life change is when we should always be seen. People have kind of I don't want to call it a stigma, it's kind of a bad word, but they say, I need a lot of money to see a financial planner.
Right.
You don't. We do everything from budgeting to when, life changes. You're getting married, you're having a kid, buying a house, selling a house. It's see someone that could point you in the right direction.
So you can have the money.
Yeah.
You need
But that is, you're right. I mean, like you said, you don't want to use the stigma word. But, you're right. When people say, I have to go to my financial advisor, people think like, you must have money.
Right.
And that is right. Yeah. And, that's great that people now, hearing that from you.
Yeah. I mean, listen,
that you don't need that. I keep hitting that. I'm sorry.
I mean, if you graduate college and you have a kid, you're renting an apartment, you need life insurance. You need to see a financial planner, or at least someone who does life insurance.
Exactly.
It starts off at any time, and that's where, again, not to tout Prudential so much, But that's where it comes in. You start with the life insurance, and then it's, hey, you know what? Maybe I should plan for retirement. Or, you know what? I have a kid. Let me start off with the college savings.
Right.
Things like that. You start small. $50 a month. Put it away. Let time and money do the work.
Yes.
Don't feel like you need to get to the point, all right, I have $50,000. Now it's time to see someone. Let us help you get to that 50.
Right.
Absolutely. I think it's worth the investment. I mean, it costs nothing to sit down with you.
No.
I mean, there is an investment of time, right?
That's
right. But that's an investment.
Right.
It's not, you're not going to come out of pocket to sit down with someone like yourself, kind of like in our industry, same thing. We give free advice all day long.
That's what it
till
is?
the end.
Right.
Free advice.
And there are people that will charge for time. You are, as a financial planner, I can bill. I just don't. I feel like that's one of the things where it's double dipping. Maybe that's me being honest. You know, I'm allowed to. I can. I just don't. You know, you don't go to a mechanic.
Feels. I don't know if you've mentioned that to me in the past.
That's what I was just saying.
You don't go to a mechanic and say, hey, you know what? Can you check what's wrong? All right, it's your brakes. By the way, pay me $300 for that. And now I'm going to hit you again for the brakes.
Right,
you know, I just don't. People need the financial advice. There are a lot of bad financial advisors out there. I will say, you know, as we kind of get going, I'll show you how to look for a good financial advisor.
Okay.
Well, I'll just say it now, I guess. There's a database. If you just Google FINRA broker check, FINRA broker check, you could Google the person. If there's a little red dot, that means someone complained high enough to FINRA. So if you see someone on there like, hey, you know what, Joe, someone told me to go to Joe Schmo.
Right.
And you Google Joe Schmo on their FINRA broker check. If they have a lot of red dots or they've changed over, you know, there's some telltale signs. You know, they've jumped ship from a company every 2 years. It just, you'll be able to tell from public knowledge. Again, that's not 100% of the time, but you could kind of get a gist. You want to see someone with some longevity. Obviously, no red dots and disclosures and fines and settlements. So, you know, that's one of the things not everybody knows. You know, here in New York, there's a financial, you know, almost every financial institution in the world is here.
Right.
But people don't know how to find the person, even if you like that company.
Yes.
It's like finding a good doctor. It's not easy.
Exactly.
Really,
it's not easy.
It's not.
People
really
think it is.
So hard.
It's like,
it really is.
Yeah.
And that's the analogy I use. I always consider myself a financial doctor.
Yes.
Because people say, like, okay, what do I need? I need to see you for this. It's like, all right, but if we're going to talk about just your retirement, I need to know what else got you there.
Right.
What, you know, what else is happening? Do you have enough insurance? Do you have enough before retirement? What if you lose your job? Do you have enough in savings? So it's, you know, bring me all the symptoms and I'll tell you what's going on. Obviously, retirement's your priority. You should have a priority of what you're looking to do. But, you know, again, we have to look at everything else to make sure all those puzzle pieces fit together. Or else if you're not going to make it to retirement, no sense planning for it.
Exactly. Exactly. Now, how old do you think is a great age for people to start?
To start looking for a financial advisor? Honestly, at any life change, is the first thing I say. So, you know, I've had 18-year-olds that say, look, I'm ready to open my own account. I know I want a Roth IRA before I don't qualify. You know, Roth IRA is one of those things where it's great, but if you make too much money, you get phased out of it, and now it's gone.
Okay.
So, I mean, I have 18-year-old clients, and then I have people like, you know, early 20s.
Okay.
But
That's
any
good.
life change, just when you're getting ready to get started.
Right.
Honestly, even if you're graduating college and just say, look, my student debt is this. Am I better off paying it down? Or am I better off saving and making money? You know, and we run the analysis of that. If your student loan interest is 7.5%, like some of them are, chip away at it because it's gonna be hard to make 8% versus knocking that down.
Right.
Because ultimately, your job is to make sure that when you sit down with someone, you help them plan.
Yeah.
Right. Because how would anybody know where they're going if they don't know where they're standing?
Yeah.
Right.
And
so
again,
you're just basically you sit down, you figure, all right, this is where they are,
right?
And these are your options now where you can go because this is where you're standing. So,
but that's again too where it loops in with you guys with mortgage brokers. You know, do you wrap up some debt inside of a mortgage? You know, it's not something everybody knows about. That's something we tee up to you guys. Or someone's coming up with us, say, hey, I have a $30,000 student loan, I'm about to take a $300,000 mortgage. If your mortgage rate's going to be 3%, but you're paying 7% on your student loan,
it's a no-brainer.
It's a no-brainer. You know, you're just automatically saving the 4%. So
even if you have either other loans, you have other liabilities, car payments,
everything,
leases, whatever, well, anything, you can still pay it off.
But that's, again, you guys are doing some of my planning already, and that's where everything comes in, where it's a give and a flow. If somebody sees me before a mortgage broker, it's going right to you. Say, hey, you know what? This is what I think. Double check with them. Make sure it's not going to work.
Right.
And vice versa. Say, hey, should we do this? or they're ready to buy a house. Get their budget in order. This is new to them. Yes. They're buying out. They don't know property taxes yet. They were renting. Mm-hmm. They don't know what it takes to upkeep a home. They were renting.
Homeowners insurance.
Homeowners insurance, exactly. Right. Renter's insurance is $15 a month. Homeowners insurance is not that. So, those are all things to consider. When you're doing a financial plan. And again, this is just building the client base for me. It's but those are who you need, because everybody that says, hey, my mortgage is taking up so much of my monthly income, I don't have money to save yet. Okay, you're not going to be like that for the next 30 years of your life.
Right. Exactly.
You see me, I help you. You know I'm doing the right thing. And we build a relationship until it's time. You will need life insurance to protect your mortgage. We make money on things like, but when the time's right. We're not out here selling something that you can't do.
It's funny, it's funny you touched on that earlier, that you're not a salesperson.
Right.
You are a salesperson, but you're not selling per se.
Right.
It's not like that's not.
I'm not going door to door selling vacuums.
Right. Exactly. You're selling things that people need.
Right. Yeah. You're a fiduciary, right? Yeah. So you're helping people. You're guiding them. That's really your job as an educator, which is what we're doing here as the Homeroom Lending Podcast. The ideas that we put. The information we put out there is about people that are educators, people that are leaders in the industry, people that are looking to, sort of like buck the trend of how things are done. Like you said, you don't charge people for fees. No. You don't charge any fees for people when they come and see you. So that's something that a lot of financial advisors don't do. They charge our fees.
Charge you.
That's not saying I never will. If there's a complex estate planning, we'll get into that too. But if I'm going to be spending 8 hours trying to figure something out, I'm going to bill you for my time.
Exactly.
For a quick conversation, someone trying to buy
started.
The
initial consultation is free. You should be able
that's how I run it. Again, I can't speak for every financial planner out there, but. Right. At some point, it's, come on, are you really going to nickel and dime every? I'd rather build up the client. And even if they go somewhere else, hey, you know what? They have their own thing. Yes. And now you brought up fiduciary. That was going to be my other part when we were talking about FINRA broker check, how to find someone. One, you want to look up the person, but two, you want to make sure the company requires them to be a fiduciary.
Yeah, exactly.
Fiduciary, for lack of a better term, is just legally required to do the client's best interest.
You have to, right? You have to look out for,
Yeah, so we are, as Prudential requires us to be, but you'd be surprised, and I won't name names, but some of the companies that don't require advisors to be fiduciaries. Wow. Scary thought, but it's allowed.
Thought.
Yeah, you guys are true fiduciaries. I mean, we're I guess we act as fiduciaries on our end, but we're not. Our licensing doesn't require us to be fiduciaries at that level.
Yeah.
But
real estate does.
But, on the real estate side. But we work that way. That's the way. You should always look out for the best interests of the client. Like when I used to be a financial advisor, I used to be a financial advisor at Merrill Lynch many years ago. That was a big thing. You have to make sure that the client is qualified, and that you're looking now fiduciary. Like, it was such a big deal. It still is. It's a big deal because in our business, people can get taken advantage very easily.
Yep.
And if you're not looking out for that person, then who is? Like, it's risky as it is. I mean, you're putting strategies that are more conservative at times, but then also stuff that's a lot more riskier.
Yeah.
So you got to have some sort of guideline that you say, okay, this is the right thing. This is where I draw the line. This is what this person can do, because people can get hurt.
Yeah,
right.
Big time.
Absolutely. People think of financial advisors, they think of Bernie Madoff. I'm going up against that every time.
I didn't want to say
you guys are going against 200007.
Exactly.
Everybody there. How many mortgage brokers were there? 2000,
consolidated.
Yeah. So. That's the thing. People think of me like, oh, okay, you're not like Bernie or Bernie Madoff, wrong Bernie. Narcos. One wants to take your money. Both took your money essentially, but
FINRA's a big thing because especially with investments. I mean, that's been going on for since the 1930s, right? 1933.
Yeah,
when was
give or take. Creation of the Fed was 1915, I think. But it's been going on.
So that's for years because people have been taking advantage in this particular industry for. Even with everything, even with all the protections and everything, it still could get taken advantage of. It's surreal. So it really makes a difference that there's more people out there like you. Listen, since I met you, I know you're a good guy. You've recommended some great things to me to do that I've yet to do, and that's a perfect example of the business. But we already a relationship, we're already connected. So it's something where I need life insurance for sure. I need to get that. Something I need to talk to you about, actually, right? So, and I've been meaning to tell you about it, a while back, but it's just one of those things. Again, you're literally talking about it, and you have to live in proof right here. It's hard to get people to to get things done like that, like, especially
Meanwhile,
life insurance.
So important.
Yeah, and again, people don't know that there's so many different types of life insurance. People think term and whole life. That's it. There's variable, there's universal, there's index. Like, people don't realize, and you could make them work for you. You could use life insurance as a retirement planning tool. It's called LIRP, L-I-R-P, life insurance in retirement planning. You could overfund a permanent policy and then pull out that money tax-free. So you're using life insurance not only to protect yourself, but you could use it like a gigantic Roth IRA. People don't realize that.
Yeah, they don't.
There's things, and the care, when I said any major life change, that go like anything, our business changes anytime Congress does something. Because in those bills, the CARES Act, the Secure Act, they always throw changes into our industry.
Wow.
For life insurance and retirement planning, that concept, there's a limit that the IRS allows because, can't be greedy with it. You can't take out a tiny, tiny policy and then drop in $10 million and pull it out tax-free. So there's a limit.
Just thinking about what
yeah, I know.
What are my moves here? What
can But so they set a limit where how much you could put in. It's called the MEC limit, Modified Endowment Contract, where the IRS basically says, hey, you have too much money in this contract where if you don't take some out or increase the face amount, all the money you withdraw later will be taxable. You're using it as an investment. You've crossed the imaginary line. What people don't realize, in the CARES Act, during a pandemic, in the 6,000-page bill, whatever it was, they doubled that limit. So people don't realize that all of a sudden, fine, I could take out a policy for X and put in however many I wanted to. That whatever the number you could have done a couple years ago is now doubled.
Wow.
So
look at that.
Again,
nobody knows that.
Nobody knows that. These are little things where, hey,
where you have to go to the professional.
And again, not touted. The company tells us. I wasn't sitting there reading a 6,000-page bill. Neither were the senators. But all the companies' legal departments will say, hey, this changed. This is what you could do now.
Right.
And for those companies, it doesn't even have to be the super rich, but the super rich are the ones really hitting that limit.
Yeah.
But all those people now it's a bigger estate planning tool. How can I use that? Some of the people that said, hey, you know what? It didn't do enough for me. Now maybe it does. So again, things change, and that's why you need not just an advisor, but you need a relationship advisor, someone who's going to reach out to you. I reach out to all my clients quarterly just to check in. Things change in 90 days. Exactly. Again, a lot of times it doesn't. Some of the clients are like you again, and I get it. Things aren't changing all the time with everybody. But things change with people that you may not know. How do I know one of my clients didn't win a scratch off for $1 million yesterday?
Right.
What is the limit now for estate planning? What's the what can you carry over?
Right now it's $22 million, and then anything over and above that is subject to estate taxes.
Wow, that changed.
Yeah, so that's higher now, but that's one that always gets teetered with because that's an easy money grab for the government. You drop that. If you drop that to $2.5 million for a husband and wife, $5 million.
Yeah, $5, right?
Yeah, it was $5
for a long time.
11. Yeah, it was a while. Yeah, they
keep bumping. Oh, interesting.
But yeah, I mean, sitting out here on Long Island, your house
$22 million covers a lot of people.
Yeah,
like 99.99% of the people out here.
Right. So the average person probably isn't hitting $22 million.
No.
But and I'm sure we don't know anyone that has. I mean, I have clients that do, but none of our friends are. Right. But when you drop that to $10 million, now it's I might know some people.
Sure.
One or two. You drop that to $5 million. Hey, I know a couple. You just got to drive by a house in Lloyd Harbor.
Exactly.
You've already hit the $5 million.
Right.
So those are the things where when they're gonna mess with that, that's on estate planning. That's on the way end of what I have to do. But you could start estate planning early if you know you're inheriting a bunch of money. And you're 18 years old, time to start doing some stuff.
Right.
So that's where I don't know what he's yelling at me about. Okay. Am I stopping? I don't know. Too much? Do you have 5 million?
Yeah. 5 minute mark.
Yeah, okay.
That's so funny.
So with estate planning, that's one where someone could tell me, sit down with me, start early because fine, even if your grandparents going to leave your dad a bunch of money,
then your dad
it's going to trickle down to you.
Yeah.
You shouldn't have anything in your name because you're going to be inheriting something. So you should get stuff out of your name. So that's where a planner should have relationships with mortgage brokers, with estate planning attorneys, with an accountant.
Yes.
And if they don't, because I'm in here pulling the strings between all of them, your accountant's going to want to save you every dollar of tax today. Your estate attorney probably says, hey, pay some tax now so you don't have to pay it later. You guys are probably just worried about your mortgage. Just hey, get approved and do this. But maybe you wrap up other debt in there, and I'm sitting there. I got to play puppet master between all of you guys.
Very right,
And that's all what comes into a financial plan, and people don't realize. If it's just, hey, here's your plan. You're going to sit in these funds. I'll call you in a year. it's not that. It's far from that. And if your advisor's doing that, that's not great.
It's a long-term relationship, basically.
Exactly.
You really want to get into with someone like yourself.
Which is really great. I mean, that's something that we really should talk to about, like getting our mortgage clients, making them understand the importance.
I love getting referrals from mortgage clients because you guys already do the budget with them.
Right.
You know what their debt to income is. So I don't have to sit there and say, how much is your utility? You guys are already doing that. So I know their monthly budget. I know what I could work with. Maybe I save them money, homeowners insurance, stuff like that. I could save them money going in. And now I know what they're working with. Right. Fine, we'll put away this. Let's look at your 401k match. Do you have disability insurance through your job? If not, hey, that's important because disability is just a living death. It's worse than dying.
Yeah, right. Exactly.
It's a killer for.
Oh yeah, definitely.
But that's when we try and see people that just own a home. Hey, let's look at your disability insurance to make sure it's going to cover if you are disabled. Because death, fine, you're not here. Yeah, the lights and everything still have to go on, so we have to prepare for that. But that's a number. When you're disabled, you still need a paycheck coming in. Yeah. I always make the joke with my clients. I'm like, it's paycheck insurance.
That's exactly what it is.
If you're sitting there racked up in a car accident, the bills, everything still comes in, and now here's you.
Right, exactly.
Definitely important to plan.
Yeah. Oh yeah, absolutely. I'm going to be sitting with you.
I'm around the corner.
Exactly.
I'm right there.
Yes.
So Matt, why don't you tell us? Why don't you give us? Put out your phone number.
Sure.
Your the name of the company, everything that you do, key things.
Been with Prudential since 2009. Matthew Donnino. Phone number is 631-396-0599. My address is 25 Melville Park Road, Suite 125. Again, the phone number is 631-396-0599.
And hashtag on Instagram. If you remember, if not, we'll find you.
I think my Instagram is just a personal one. I don't have a business page. I'm not good at it. I have no idea. Yeah. Okay. And all the compliance laws. And by the way, let me get the compliance stuff out of the way too now.
Yeah, folks.
Yes.
Everything I'm saying is general. Please see a financial advisor.
Disclaimer.
Disclaimer. I don't know what I'm officially supposed to say, but please speak with your financial advisor and professionals because what I say may not apply to you, but things like the state tax limit, there's things like that. Just speak with your financial professional.
Absolutely.
Doesn't mean it 100% applies to everybody. So.
Exactly.
Absolutely.
Yes, absolutely.
Thank you. Well, Matt, thank you for joining us.
Thank you so much.
Thank you for spending your time. You're a wealth of information, knowledge. Yeah, I mean, we definitely don't. A lot of times, we just don't take the time to look into our finances at this level, right? Because, like you said, people think that. For you to use or have a financial advisor, you have to make a lot of money, or you have very complicated finances and things like that.
Definitely.
But no, you're the starting point for a lot of things: retirement,
life insurance.
Life insurance.
Everybody needs life insurance.
Investments.
It's a very big thing.
So no, thank you. I mean,
like I said, job change. Any life major life change is the one. Job change, house, kid, marriage, divorce. Any major change in life. It should be to see a financial advisor.
Right. And who better?
That's right.
Matt right
and I'm here for you.
Yeah.
13 years in the business. And I have to say, for you to be this long in the business at your age, it's an accomplishment because a lot of people fill out. Like you said, Madoff. You have a lot of crazy characters out there.
Oh, yeah.
In fact, that's one of the reasons why I left the industry. I couldn't. I didn't want to have to battle that stigma that you stayed. I remember, it's impressive because it was really fatal. I mean,
it's tough.
Had a lot of confirmation bias to work with, to break down basically in order to get your clients, and you're knowledgeable. So I think that you're doing amazing. I think you're gonna be like one of the next superstars in our industry.
Absolutely.
Like I feel like a lot of the people that we meet are people that are just. I don't know if it's just an affinity that we've had lately with the people that we work with and we connect with, but they're all educators, and I would feel comfortable.
True.
Folks, you feel, you need to speak to someone that's going to guide you, objectively,
way.
Right? Yep. And as a fiduciary, Matt's your guy.
Yeah. So. But that's how I always looked at it. You get one reputation in your career. So
that's it.
I just tried to be the educator. If there were times I was just, like I said, just making a plan for someone to give them the education.
Right.
If they took that plan and went somewhere else, I didn't want that person as a client. Then,
right.
That's
exactly.
I'm a relationship type. Even if it's something not now, the amount of clients that I've said, "Hey, Matt, I don't have this now, but I will. I'll call you." Yeah. And then I get a phone call 4 years later. It's things like that.
You're in it for the long haul.
Yeah, that's how it is. It's Just got to be right.
Yes,
exactly.
Well, thank you, Matt.
Yeah, thank you.
Thank you guys
so
for having me. I
much.
appreciate it.
Yes, thank you.
Thank you.
So,
And,
thank you, everyone, for joining us on another episode of the Homeroom Lending Podcast. Thank you, Matt, for being with us.
Yes, thank you.
Kim, Jamie.
Thank you, everyone.
And thank you, everyone. Goodbye.
Yeah.
Bye.